All right, hey everyone. Thanks for joining me here today for another Bitcoin video price action analysis. My name is Mark P. Markets, Mark Principato. I'm a chartered market technician. Let's get this thing started, shall we? All right, so again, if you're new to the stream, let me just quickly explain to you how this works. So first, I'm going to go over the economic calendar. Right, you should check the economic calendar. I am simulcasting on TradingView and on YouTube, so you should check the TradingView economic calendar. It doesn't matter which one you use, but we'll talk about that very briefly today. Then I'm going to go over the Bitcoin price action here, the Bitcoin analysis. And in today's session, as you can see, as the title is called How to Assess Risk on the Smaller Time Frames, I'm going to spend a considerable amount of time on talking about how to place stop loss orders, because on smaller time frames, there seems to be a lot of confusion here. And I think we can talk, there's a lot of value I can provide in that area, especially since my trade scanner has just called Ethereum long. Okay, so we're going to go step by step. We're going to put the order entry together, and we're going to talk about a lot of things around that. Okay, and then of course, after that, I'm going to get into your questions. So if you have a question about a stock or an altcoin, please share it in the channel now. And when I get to that portion of the thing here, then I will be happy to answer your question. Also, if you'd like to share what country or what city you are from, that's always a fun fact. I am streaming from the greater New York City area. All right, so northern New Jersey. That's why I sound the way I do sometimes. Also, on TradingView, if you have a hard time seeing me, press the refresh button on the browser. I don't think anyone is watching me over there on TradingView. Okay, now I see one person watching me. All right, just make sure you refresh the browser if you can't see me. Also, quick announcement. TradingView, speaking of TradingView, TradingView is actually having me on as a guest on their podcast or their stream this Thursday, the 20th, at 1 p.m. Eastern time. I'm going to be on their stream. I don't know what they're going to talk to me about, but it should be a good time. I mean, they're good guys. They've been very supportive, and it should be really cool. So if you have a chance, check it out. Again, it's at 1 p.m. Eastern time this Thursday. I will be on TradingView podcast or stream, okay, whatever they call it. All right, now, so with all that being said, let's get this thing started here. Let's move along. I'll make my chart here bigger in a moment. Let me show you this slide first, because it's a very important slide. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. That's my Seinfeld impression. That's how Jerry Seinfeld would read that slide, in my imagination. Anyway, all right. So first things first, let's talk about the economic calendar. All right. And let me just say hello to my regulars real quick. All right, we got Alex. Hey, good to see you, Alex from Romania. I love Romania, especially now that they let the brothers free. Well, not really. They're still on house arrest, but still. All right. Raman, good to see you. Mr. Plow, Glenn. All right, cool. Peter, good to see you all. All right. I guess today's slow, man. I got like no one watching me here today. Or maybe no one likes the title. I don't know. Anyway. All right. By the way, if you like the content, do me a favor. Please press the like button. Please press the boost button. Subscribe to the channel. It helps. Okay. Also, make sure to check the links in the description, because there's a lot of useful information there as well, and especially relevant to some of the topics I'm going to be covering here. I will make this chart bigger here in a moment, so don't worry about that. Now, let's get into the economic calendar, shall we? There's not much to talk about here. So anyone want to take any guesses as to what is important this week? All right. So you should always check the economic calendar at the beginning of every week, especially if you're involved in Forex pairs. All right. You're looking for significant events that can result in a range expansion. Right. There's no way to know which way the market will go, but you want to be prepared in terms of mitigating risk. Hey, how are you? From Amsterdam. All right, cool. Welcome. Amsterdam. Nice. All right. This guy's invented the first stock market. See, I'm showing off my knowledge here. All right, cool. And also, they have the best DJs in the world. How is that possible? All right, I love you. I love the music that comes out of there. Anyway, I'm one of those kind of guys. All right, anyone want to guess on the economic calendar? Economic calendar. Anyone want to tell me anything? Don't be afraid. I want you to participate. Keep in mind, we're going to go over a trade entry today together. Okay, I'm not going to just throw it at you. We're going to assemble it together, right? It's very important that you're able to go through this process. Hey, Stian, how are you? Okay, so hey, Matos, how are you? So you say doable goods on the 26th. Okay. Raman says nothing significant this week. Raman, good answer. Okay, so Matos, the durable goods, that's an item that's coming out this week, but it's not a major item. I mean, I looked at the calendar, right? First of all, as far as major news goes, there's nothing coming from the U.S. as far as major news. There are some items, like I think there was like there's a PMI number coming out on Friday, and then there's this durable goods, but those are very insignificant. They don't really lead to any major market movements. So when we look at the economic calendar, here's what we're looking for. We're looking for anything from the FOMC. We're looking for any Chairman Powell testimonies. We're looking for any FOMC meetings, interest rate announcements, right? We're looking for those. We're also looking for non-farm payrolls. We're also looking for anything that's about inflation, like CPI, right? Those are like the main ones. If we don't see any of those, then it's reasonable to assume that we're looking at generally a quiet week in terms of economic announcements. Okay, does that make sense? It doesn't mean we can't get a surprise, but it just means that there's no planned events that we really have to mitigate risk around. Does that make sense, you guys? All right, so let's move along. Let's move along from the economic calendar. But this is what you should go through this routine every Monday. Check the calendar. All right, now, next, let's talk about this Bitcoin. I want to talk about this situation first. All right, let me make my chart bigger so you guys can see it better. Oh, that's not the one I want to use. I want to use this one. There we go. Okay, so you guys should see my chart bigger. I wrote my article on TradingView yesterday. Hopefully you guys read the article. And in that article, I want to point out a couple of things real quick before I talk about the actual trade idea, because we're going to talk about a trade idea today. All right. Before I talk about that idea in assessing risk on smaller time frames, notice I drew this map, this little line or this illustration on my chart. Okay, you can see that little line. I drew that on my chart a week ago. If you go back to the article that I wrote that, all right, this price action wasn't there. It was just a line by itself. All right. So keep in mind, if I was a fraud or a fake guru, I could use that as an opportunity to tell you I have a magical way to draw these lines. And the sad part is half of you would believe me. All right. There's no magical way. There's no magical way that I drew this line. It was one scenario out of many scenarios. All right. But since I know price action, I understand context, I understand levels. I thought that this was a decent scenario. All right. I believe that there was a limited range of scenarios, even though theoretically scenarios are infinite, like anything can happen. But I can limit the range of scenarios. And this one made sense on the verge of that breakout. I mean, even this little pullback thing and situation in here, right? Look where the market's pulling back, right where I drew that little pullback. Go back a week ago, press the forward thing on the chart, and you'll see the market is basically following my line. Again, I can't see the future. I don't know the future. But the thing is, I know what's reasonable, okay? And the market is agreeing with me. That's what's going on here. Now, so we're going to get more into this Bitcoin analysis here and what to expect as the week unfolds in a moment. And then, then I can get to your questions. So let me just move this over. But what I want to talk about first before that is I want to get into this trade idea right now. And this ties into the risk assessment on smaller time frames. Now, if you're not familiar with my trade scanner, I've been talking about it now for a few weeks. There are two text channels where these scanners are, and most of you have access to that. Okay, so there's the stocks one, and then there's the one for Bitcoin and the coins, right? The one for the coins only looks at the top 10 most capitalized coins. That's all it's looking at. It's not looking at anything else. Now, the trade scanner is a screener that takes my criteria and it waits for my criteria to be met, and then it outputs a notification. All right. Now, there are many advantages to using something like that because, for one, it's doing most of the work for you. You don't have to sit there and say, well, I'm not sure. Is this a bullish trend? What time frame should I look at? It's doing all that for you. All you have to do is come up with the risk assessment and set up the orders. Now, so let's get into this a step further. A typical notification, right? I want to talk about a couple of them here. And many of you who have access to the channels, you know what I'm talking about because you can see the notifications. All right. On April 7th, all right, which was the previous Friday, it called Bitcoin long. All right. Bitcoin long at 27,920 something, 27,929 or something like that, right? Which was around here somewhere. It was in this candle, I believe. Let's see. It was around this candle. Where's this? Let me see what the date is here. It was on this day right here. Okay, so it was in this area. It called it long. All right, as you can see, that trade was worth a couple of thousand points. Now, that's not the typical expectation for these type of trades. The typical time horizon is 1 to 3 days. This thing persisted for like a week, all right, which is unusual. It's not something that would be reasonable to expect regularly, but the trade was huge and the reward risk was minimal. The risk was minimal and the reward was very was outsized in terms of the risk. Now, why is it the system that knows that? The system doesn't know how far the market's going to go. The system can't forecast this, okay? But what it can see is the trend, right? It's looking for the trend, and then it's looking for levels, right? Which is what I teach my students. And then from there, it's waiting for particular criteria to show up. And these are momentum reversals on the side of the trend. It will not call counter trend trades. It will not call Bitcoin short here. It will not. That would have to come, that's counter trend. That's something you'd have to come up with, right? And I see Alex got short there, which is interesting. So here's what I want to do. So that was what the trade scanner called a week ago. Now, on the 8th of April, it called Ethereum long, okay? Ethereum long at like 1857 or something like that. I can't remember the exact price. And let's go to Ethereum for a minute because this is what I want to show you. Let me pull up my Ethereum chart. Let's see, we'll go to this one. That's the one, right? Is that the one? Yeah. Let me just go here. Yeah, okay. So on the 8th, let's go back to April 8th here real quick. Now, I haven't changed my time frame yet, okay? But let's just go back here real quick to April 8th. When was that? That was back here. This is when it called Ethereum long. Nice long, wouldn't you say? Okay, and it called it twice because there was some fooling around with the price action, and it called it twice. Now, I mentioned that because now these trades look great after the fact. Like, wow, it was amazing. Okay, yeah. And it hasn't called the long until today. Ethereum was called long today. And those of you that have access to the channel, again, it's a channel in the community. And I recommend that people set up push notifications on that channel so that you don't miss these calls because you don't know when it's going to call the coins. The coin signals are passive, meaning it waits for the signal to be met and then it gets pushed to the channel, right? So it called Ethereum long. What I want to do in this stream is I want to assess the risk on a smaller time frame with your help, and then we can put a trade idea together. Now, let me just tell you right now, I highly suggest that you if you're going to follow this trade for real, you follow it on paper. Do not take this trade for real. You need to get a feel for how the trade scanner works. Now, this thing has been calling a lot of successful trades. In fact, I don't see Alice here, but and Stian, I appreciate you stepping up for. I gave an assignment to my students, or who wanted to take this assignment, basically putting together a random list of these notifications to see what the outcome looks like, basically like a trade history, but these aren't actually trades taken. These are the notifications that were given out. So Alice took the job and he put together, he's still working on it, but he's almost done with it. He put together a list of 10 randomly selected trades or notifications. And then he basically assigned a stop and a take profit based on the 1.5 to 1 formula, reward risk formula. And then we want to see the outcome. Like, was this profitable if you took these 10 trades randomly, meaning, you were just picking this one and that one and this one. All right, so we're going to see how that goes. Now, 10 trades is a very small sample. I realize that. And you can't like expand on that, but you can't say, whoa, 8 of them were profitable, so that means it's an 80% win rate. We can't say that on 10 trades, okay? But a fraud would say that. But what I want to do is I want to build on this list over time so that we can have 50 trades, 100 trades, and then we're going to get a good sense of how the robot is performing so that people will trust the robot, because people don't trust it, and it's calling some great trades, okay? And I'm going to talk a little bit about trust in a moment here with the robot, but let's get into Ethereum. How many people are interested in Ethereum, first of all? I want to see if you guys are listening. So we got Ethereum here. Let's go now to, let me explain what the signal looks like, all right? Just in terms of the notification itself. It says in the channel, right? It says it just came out today at like 12:30, just after 12:30 Eastern time. It says bullish reversal, coins, and then it says Ethereum, okay? And then it has the price, 2000, I think it was 2035, I think it is, okay? Anyone want to confirm that price for me? You guys who have access to that channel? Okay, cool. So I think it says Ethereum. It says bullish reversal, coins, Ethereum, a price. I believe it's 2035 is the price. Okay, 2035 and 25 cents. I believe that's the price. Someone want to just type it into the channel here, and then it says look for long setups on 1 hour time frame or higher. Okay, that is what the notification says in the channel, in the text channel. Okay, Alex. So, well, here's the thing. They're swing trades, but they're not the same type of swing trades I take. They're smaller time frame. The time horizon on these trades, Alex, is 1 to 3 days. That's not exactly a swing trade. So you could think of it as more of like an intraday swing trade or sort of an intraday trend trade. That's the best way to describe these. These are not typical swing trades. The typical swing trade is, for one, would not be called long at this level. And the robot that I have, I programmed this thing, and it's programmed to look for certain criteria no matter where it shows up. It can't see the context. It can't see, okay? So that can be an advantage in some ways, but you do have to apply context. But it is on a smaller time frame. Raman, thank you. So here's what Raman said. Oh, Raman's in it. Okay, so Raman says, that's the price. Thank you, Raman. 2083.25. It was called today at 16:30, which was, basically equates to 12:30 Eastern time. That's obviously another time zone right there, but that's what 16:30 means. Okay, so hey, Malad, yeah, we'll take a look. Thank you. And Malad, I haven't forgotten about you. I'm going to get in touch with you very soon. Okay, so again, thanks for stopping by. We're definitely going to meet up. All right, I've been thinking about that. So anyway, so let's get into this idea here, so you guys can see. In fact, here I'm gonna take this right here, and I'm gonna show this on the channel. Okay, so Raman, see that what Raman put right there? That is what the text notification looks like. That's exactly what it looks like. Okay, so now, so we have a price. Okay, 2083, and that's all we have, and we know that we should be going long. The robot has done most of the work for you. The robot knows, it's identified the trend, it's identified a minor level, it's identified a confirmation, right? So the criteria has been met. Now we have to step in and figure out our orders. This is the most important thing, no matter what level you're at, whether you're beginner or more experienced. All of your trades, besides like 1 minute charts, all of your trades should be composed this way. Okay, you should know your entry, you should know your stop, and you should know your take profit before you enter the trade. You should know this. So this is how we're going to set up the order. All right, so now, if you notice here, we're on the daily chart, okay? But this chart is not exactly the best chart to use for these type of trades, which are coming from the trade scanner. So it says 1 hour or above. So step one, we're going to go to a 4-hour chart. So let's say you have access to the channel, okay? And you get that Ethereum, call here, right? Again, I'm going to put that in the channel. So the Ethereum call pops up, and you're like, oh, okay. Ethereum 2083, it says to go long. Right, that part he just wrote the price, but the channel says go long. All right, it says bullish reversal, blah 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 coins, and that's the price it gives you in the timestamp. So we know it's a long. Okay, so now this is you pull up the chart when you see that. Now again, it called it 3 hours ago. Okay, which was probably on when this candle turned, when it took out this high. We can see there's a candlestick set up here, but that's not what the robot's looking at. All right, now, what we have here is a range low. So what you want to do is you just want to use some general judgment. You should clearly be able to see on the chart, and tell me if you don't see this. What is the trend of this chart? Can anyone tell me on this time frame? We're looking at a 4-hour time frame, which is the first thing you need to do when you're assessing risk on a smaller time frame. And by the way, what I'm going to show you here, you can apply to a 30-minute chart or a 15-minute chart. You can do that. But these particular setups are basically 1 hour and above. So you should not look at less than 1 hour for the trade scanner. Okay, make sure you understand that. I want to be very clear about that. Okay, if you're using some other type of strategy, yeah, assessing risk is going to be the same way. But what I want to go through here is I want to go step by step, setting up the actual order. Okay, and again, I encourage you to trade this on paper if you're going to do it. All right, so we pull this thing up, bullish, clearly bullish. Right. So, all right. So that's part of your context is answered there. You know that the long makes sense. Where's the first support on this thing? Can anyone tell me? Where's the first support? Actually, we have a couple of supports here. Where's the nearest support? What would you say is the nearest support? I'm going to give you 2 lines. Is it the first line right there? Or is the nearest support the second line? Where is the nearest support? And I'll take this off over here. Where is the nearest support? 2060. Okay. Parabolic. Yeah. Well, again, there's no way to know the outcome, right? The robot can't tell us that. The robot is only telling us, it's giving us a high probability entry based on, it's looking for bullish momentum within a broader bullish trend. That's what it's looking for. It's looking for a momentum reversal. It's never going to call anything bearish if it determines that the trend is bullish, right? It will never call these areas short. It will never do that as long as the trend is bullish. Now, so can anyone tell me? So Peter says second. Okay, right. So this is the second line, right? That's the second line I drew on the chart. That's the nearest support. Again, keep in mind, you can do this on a 5-minute chart if you wanted to, or a 30-minute chart. You're looking for levels. All right. Those are clearly 2 levels. All right. This is an old resistance, which is now a new support. And then we have this new support level over here. Okay, which is the most recent support. Now, when it comes to assessing risk, this is the most important lesson here, the most important part of the stream. When it comes to assessing risk, people typically will use the bottom of the entry candle. They'll say, okay, well, the candle that I'm buying right here is, we can look at the low of the candle, and it's 2070, right? That's the low of the candle. So that's where I should put my stop. Wrong. That's not the best place to put your stop all the time. In certain situations, it may make sense, but those situations are typically when the candle is large, right? Like this over here. Like if you were going to short whatever, putting the stop above that candle would make sense. It's a large candle, right? So that's a good point of reference. But when you have small candles, right, you don't want to put your stop too tight. So what do you do? Who can tell me? And it's okay if you get this wrong. Don't worry about answering things wrong. I'm not going to make fun of you. All right, this is how we learn. Okay. Oh, so super. Just click on the link in the description. Right. It's in my Discord community. There are channels, but obviously there, only certain people have access to these. So if you want to become one of those people, there's a link in the description, or you can contact me and I can give you more information on that. Okay. So I'm asking you guys real quick. So what do I do if these stops are putting stops here are too tight, which is what the typical person will do. They'll put the stop there. Okay. And in this type of situation, this is what I'm trying to teach you. You don't put the stop there. Okay. Unless you're on a smaller time frame and you're dealing with a big candle. Okay. You got to give it a little room, Alex says. Okay. How much room? Can we do this in a routine way? Like, how much room should I give it? Because we can't, that's very subjective. You're correct, but how do we know how much? Depends on the instrument. Okay, well, that's true. But so we're looking at Ethereum. How much room should I give it on Ethereum? Because I'm trying to put a trade idea together here, right? So with the information that I have in front of me, how do I assess the risk? Okay, so more room. Okay, still a subjective answer though. What's more room? 1,000 points. So based on the information I have, how much room, there needs to be a routine way to do this. I should be able to do this the same way every time. Sure, I know I need more room, but how much room? Based on ATR, that's one technique, but it's not, ATR can be tricky, right? You could do 2 times ATR, which is okay, but let me see if someone answers here. Below the top blue line. Okay, Golden, good answer. That's the answer I was looking for. You use the swing low. This top blue line, which is our support, we can call it our primary support or our closest support. That support represents the swing low. So you have this is the swing low area. Look, we have 2 areas, right? We have a low. Look at this low over here on Ethereum. 2041 is that low. Okay, see where I'm pointing to? Here, I want to make that clear for you guys, because this is a very valuable lesson. Okay, so let's just get in. Let's make this real big. Okay, so you guys can see. And we have this low over here, as you can see, and we have this low over here, right? Those are our swing lows on this 4-hour time frame. All right, does that make sense? So there's a couple of things you can do here. You can take the lowest one, which would be this one, and put your stop here. You are now basing your stop on the swing low, right? You can do that, or if you want to use it a little tighter, you can say, all right, you know what? I'm going to use this range, okay? Basically, you're basically working within this range, and you're saying, all right, that range, I'm going to put my stop right here. Okay, it's in the higher part of the range rather than using the extreme bottom of this swing low, but it's still within reason. It's not at the bottom of the candle. Does that make sense? Do you see where I'm going with as far as the swing low versus using a candle low? Do you see that? So to make this simple, I know this may be a little more complicated when you're using a range. So if you want to keep it simple, don't worry about the range. Look for the lowest low, all right, which would be this one. When you're comparing a range of price action, and you're saying, okay, I'm going to use the swing low. That is the swing low, okay? And we can argue that there's a swing low here too, and then you could basically take the average of the two. But if you want to use the swing low, that's it. Does that make sense to you guys? Your robot seems to call longs in the support area where a pin bar gets taken out, and the risk reward seems reasonable. Okay, well, I programmed it. It's not like this is a surprise, Alex. I mean, the robot is basically looking for my personal screening criteria. I programmed it, and this is what I teach in my training program, right? So I basically took the criteria that I teach, and I isolated certain things in the market, and I used certain tools to do this, and I found a way where it looks for trend trades, momentum reversal trades, okay, which are it's going to offer you a better probability. But the thing is, though, what it does not do, it does not give you the orders, and that's what I'm trying to go over here. I want you to be able to place the orders. That's what you have to be able to do, and that's a good exercise. You should be able to do this, okay? Now, I'm not talking about you. I'm just talking about everyone. Okay, so now here's the thing. We're going to get to that, Alex. So now, if we've determined that our risk is there, we have assessed our risk. That's the risk for this trade. Okay, that is the risk. Now, the price that was given to us by the robot was, well, let me just go back to 2083. Now, I'm going to put that on the chart here. Where is 2083? It's right here, right? So we're fooling around there right now. This thing's at 2084. The price it gave us was 2083. Okay, so that line is the price that the robot gave us. So if we look at that and we say, okay, so our risk is basically all of this, right? So 2083, but here's the thing. Here's what I have to mention about this. That price it's giving us is not exactly the entry price, okay? It could be, but like in this case, we can use that as the entry price. Or you can wait until the candle closes and then take the high of the candle, which is a much higher, 2088, right? You can do that. Or you can look at the previous candle. What I'm trying to give you is a routine way so that you can do it the same every time. You have to do this the same every time. Whether you're following the trade scanner or you're following something else. You should be able to put your orders together exactly the same way every time, okay? So we've assessed our risk, and we want to talk about an entry. The robot says 2083. What does this candle tell us over here? Let's see. What's the high of this candle? 2082. So this right here took out the high of this candle, right? So that's a sensible entry. So in that scenario, like you can take that. Now, let's say, for example, it gave the 2083 price, and then it just took it out a little bit, and then it's fooling around below that. You can basically say, okay, you can enter at whatever price, but it's nice to use a specific price based on a specific thing, like this candle, okay? So you can use that price, or you can use this price upon the close. That's going to be up to you. Which price would you guys like to use? There's no wrong answer to this one, okay? I'm just trying to make it, I don't want to confuse people. I just want to give you a routine way to do this, so that if you're looking at the trade scanner, you know what to do. The simplest thing to do is just take the price that it gives you. But by the time you pull up the chart, it may not be at that price. So you're like, oh, what do I do? You know, you can look at the previous candle, and if you're above that high, then it's okay to take it at whatever price. If you're above the high, 2082 is the high, okay, of the previous candle, right, of this candle. That's actually, technically, if we weren't using the robot or the trade scanner, technically, right, I would be using this as my entry candle, and taking out the high of that candle. That would be my entry price if I was doing it on my own, okay? But the robot gave me the price 3 hours ago, and I don't know what this candle looked like 3 hours ago. Maybe if we go to a 1 hour chart here, right? We go 3 hours back, right? This was 3 hours ago, okay? Actually, right here. So this is when it actually called it. Right around here, okay, if you go to the 1 hour chart. So as you can see, if you want to use that, you can say, well, you got an inside bar. You can take out the high of the inside bar and just go long. My point is, you need to have a routine way, okay? Let's go back to the 4 hour chart. I'm afraid, I don't want to confuse people. That's why I kind of hesitate, all right? I want to make sure I'm giving you clear steps here. So just to review, step one, we're assessing the risk on the smaller time frame. We're using the swing low. In fact, when I instructed Alice, and I said, Alice, don't put the stop at the bottoms of the candles, use the swing low. That's the swing low. You have to use your judgment for that. The robot can't determine that for you. You have to use your judgment, okay? But the chart tells you that information. So our swing low is there. We're going to say our entry. We're going to say our entry is, we're going to use 2083. That's what the robot called. We're going to use 2083 because this candle high is 2082. The current price is 2081. We'll say 2083. That's going to be our entry. Okay, cool. So now, 2083, and our stop is going to go here at, what is that? 2041. Okay, so basically 40 points, basically, right? Or a little bit more than, but you're right, you're right, Alex. Basically, you're risking 40 points, and Alex got the answer there. All right, so our risk is here. We've assessed our risk. Now the next question, right, which is step 3 here, people usually say, well, where do I put the take profit? How do I know? Right? Well, the robot can't help you with that, because the robot is not, that's not what it's programmed to do. But what it can, what you're doing is you're applying a simple formula, 1.5 times your risk. Now, as you saw with that Bitcoin example and the previous Ethereum example, it went way more than 1.5 times. But 1.5 times is a reasonable and decent probability, especially for this time frame, because as you can see, it's calling the long in not a very opportune location when we use our judgment, right? The robot doesn't care about our judgment. The robot sees the setup and it calls it. And it says, okay, it's on the side of the trend. I'm calling it without hesitation. That's what the robot does. But, you know, as a swing trader, I would be hesitant to get long here. It's not the ideal price, okay? But doesn't mean it's not going to work. So we want a high probability of getting out green. That's 1.5 to 1, okay? So we get that price, we get that take profit. We get that from knowing our risk. So Alex says here, we risk 40 points. If we multiply 40, which is our risk, times 1.5, what number do we get? I mean, Alex gave us the answer, but I just want to see if people are paying attention. Okay, considering your entry and bearable 1,000 point, for example. I don't know what you mean there, Noah Trader. Noah Trader, thanks for sending me that answer, that message. I'm going to look at your thing. I just haven't had the time, but thank you. I'm going to take a look at it. Okay. How do I set up the channel? Okay, I'm just looking. Chris, you have to contact me about that. It's in my Discord server. Okay, you have to contact me about that. All right, Noah. So Noah says 60, right? So you're multiplying your risk, which is 40 points in this situation, by 1.5 or 1.5, which is 1.5 times your risk, and you get 60. So let's put that on the chart here. Okay, so 60 points, we add that to our entry. What is 60 points? Let's see here. So we're going to say 2083 is our entry. So let's see, from where we are here, we're going to add 60 points. So let's see. It's like 43, isn't it? Would that be 60 points from here? Up here? Is this correct? 2143. Correct me if I'm wrong, you guys. 60 points. So if we add 60 points to, I want you guys to do the work. All right. So if we add 60 points to this price, what do we get? 2083 plus 60, right? What is that? 43. Is that right? 2143. Is that correct? I want you guys to let me know. I want you guys to confirm. Okay, Noah Trader says 2143. That's this price here. So again, we put these on our chart, all right? So we know our risk basically, right? And we know our reward. This is what it looks like. Now, using our judgment, this is what the robot says is a long opportunity. It's saying go long here. It's going, and we have to know to at least put a profit or take profit there. Now, look at this. This is a pretty significant resistance. We know this. The robot doesn't know this. We know this because we can look at the chart, okay? And we say, this is where I should be getting out. So in a situation like this, you're going to have to watch out for trouble, right? The robot can't tell you. The robot's not going to tell you when to get out. You have to know that, right? So this would be ideal. And if it breaks out above that, that's going to be even better. So since the trend is bullish, it is within reason to say, okay, I'm going to exit 50% at that price. And maybe you want to put another 50% at 2 to 1, okay? Or something like that to give it a chance to follow through, like we saw in those Bitcoin moves, right? Ethereum had a similar move. We don't know if that'll happen, but you want to open yourself up to the opportunity in case it happens. Now, more importantly than the profit, because again, everyone's always interested in the profit, you have to be prepared for what can go wrong. And if this thing works its way up to this area, for example, and starts giving you a hard time, it gives you a bearish inside bar, it gives you a bearish pin bar, all right? And you have profit in this trade, you should do one of two things. Who can tell me? So I'm going to draw it on here. And I want you guys to tell me what you should do if you see this scenario. All right, so price makes it up here, and you're like, all right, I'm green. Right, it goes to here, and then you get a candle that looks like this, and you're like, I don't know, that's a bearish pin bar, and it's occurring right at the resistance. It never got me out here, never went to my take profit, and I'm seeing a bearish reversal. The robot's not going to tell me about this. I need to know this. So Alex says trailing stop. Okay, good answer. Being a high-risk location, stop loss should be raised, break even. Yes. Well, so once the trade goes in our favor, how much in our favor, Alex? 1 to 1. If the trade is 1 to 1 in your favor, meaning you're up, you risked 40 points and this thing is 40 points in your favor, it would be a good idea to move your stop to break even, especially since you're in a high-risk location, like Alex pointed out. Alex got it. He doesn't even get these trades. And he understands how it works. Okay, so if you see, so as soon as that thing gets to 1-to-1, it's a good idea to move to break even. If it works its way higher and gives you a hard time, gives you a candle like this, you should, if you're at break even, you have a risk-free trade. If you want to take something off the table because this thing's giving you a hard time, there's no problem. You take it off the table. That is how you manage these, okay? Because these trades are only good for like a day or two, maybe three, all right? That typically, especially on the stock side. I mean, this thing's been calling shorts like crazy on the stock side. All right, so I just assembled here a trade idea, okay? 20 so try taking this on paper. You should be long now on paper. It's against you because we're long from 2083. Okay, the stop is going to be at 2040, whatever, 2040. All right, and the target is going to be at 2140. Okay, take this on paper and let's see how it plays out. There's no guarantee it'll work. It may just go straight to the stop. That can happen. This is a high risk location. Now, one other quick thing I want to say about that is percent of risk of your account. This is another thing that people don't get right. If you have a small account, no matter what size account you have, typically you should be risking 1 or 2%. 2% is basically like the industry standard on the professional side, but you should not be risking 5%, 10%, and that's very easy to do on a small account. All right, if you want to make serious money in this game, you have to have a big account. And that's what prop firms are all about, right? That's what they provide. That's the solution to that pain point. Now, I have a whole opinion on prop firms. I'm not going to talk about that right now, but you need to have money to make money. All right, serious money. But if you have a small account, it doesn't mean you can't play this game, but you have to play this game proportionally. Otherwise, you're putting too much of your account at risk. So in a situation like this, if you had, $10,000 in your account and you're risking 1%, you're risking $100. So you have to size appropriately so that if this thing goes 40 points against you and knocks you out, you lose $100. Not $400, not $500, you lose $100. If it goes your way, right, you make $150, right? That's what you're looking at, right? So that's what I just described is the ideal way to do this. Any questions about that? Let me know. I usually use a few points higher than the break even. No problem, Alex. There's no problem with that. No problem. Okay, cool. So you guys got it. Let me just go over here. So I wanted to go over that real quick. Get the stop loss at break. You know a trader. You got it. Right. Okay, Suzanne, cool. Good answers, people. I'm just looking back here. So again, if you want to know how this thing works, let's just go back. Now we're going to go back to the larger time frame, right? So I can get into my Bitcoin analysis very quickly and then answer your questions. All right. So, again, your judgment is a key component to this whole thing. The robot is determining the trend, it's determining the levels, and it determines a particular type of setup. Okay. But the location is going to play a role in how you manage the risk or assess the risk on a smaller time frame. Everything I just showed you, you can apply to a 5-minute chart or a 15-minute chart or a 30-minute chart. But we're assuming that you're using some other type of strategy, right? Assessing the stop doesn't have a whole lot to do with the strategy per se. It could, but in the case that I'm showing it here, right, we're talking about assessing a stop or assessing risk using the swing low. And this is really appropriate for larger time frame strategies like 1 hour, 4 hour, daily, weekly, right? That's where you want to be able to do that. If you're on a very small time frame, it's going to be very hard to do that, not very practical. Okay, I mean, you can try, but a lot of times at smaller time frames, you don't have time to be fooling around with orders. You have to be in and you have to be out, but you have to know these things in your head, all right, before you even get into that. I'm not going to talk about that here. All right, so we know that Ethereum is not in the best location for swing trades, but there's a possibility there that you can make 60 points possibly in ideal situation, or possibly longer. And earlier, as you can see, I called this trade here, it's called other longs. And there have been times where it hasn't been in the most opportune locations, like this over here. That was a resistance, but the market broke through. Okay, so again, markets are highly random, and that's something you always have to accept. Just because we are at a less than ideal location doesn't mean that it's going to do what we think it's going to do. right? Meaning, okay, it's going to pull back to here. That's what we would think. That's what typically I would be looking for as a swing trader. And that's what I'm looking for on Bitcoin. All right, so let's segue out of this and let's go to Bitcoin. If you guys have questions about everything I just went over here, please let me know. You can find me in the Discord server, right? That's the best place to ask me a question. Send me a question there. I will not contact you on there. You contact me first. There's been a lot of fraud attempts of people impersonating me. Okay, so if I contact you first, most likely it's not me. All right, anyway, but you can contact me on there and I'll be happy to answer your questions about it. So let's talk about Bitcoin here. Let's go to the larger time frame and let's go, we should go to my 8-cap chart because that's where I have my lines. 8-cap, where's my 8-cap chart here? Hold on, guys. I'll get my 8-cap chart. Just put this over here. Okay, here it is. All right, so back to Bitcoin real quick. All right, I want to talk about this, and then I'm going to get to your questions. So this is this is Bitcoin on the larger time frame, right? As we know, trend is bullish. It's pulling back. So everything I just outlined, right, with that trade setup that we talked about on Ethereum. I mean, if Bitcoin goes here, and this is what you have to keep in mind with these. By the way, the robot has called a couple of shorts, like in Matic. It called a short in something else. And I warned people, I said, be leery of those. If Bitcoin is generally bullish and it's calling shorts on other coins, those are probably low probability. You should probably avoid them, okay? Because some of those coins are relatively weak, right? Always look to the leader. The leader will give you the answers. So Bitcoin is generally strong. We're pulling back in an area where a pullback is likely, all right? So the thing is, though, here, look at this minor resistance back here, right? That's in the low 29s. We're trying to come off of that. Realize that even though this candle looks ugly, it doesn't mean that we're going to get follow through to this area here. This is what you need to realize. That's one scenario out of many. If Bitcoin pulls back into this area, then I would be more interested in a greater expectation swing trade, meaning, you know, looking for the setup there, which is the robot will most likely call longs there too, most likely. But that's where I would take a long and have a greater expectation of it, meaning I would look to hold that for more than a few days. Because look at the location. If there's a bounce in this area right here, we're looking at reasonable, a test of 30K again, which is within reason. And that type of test may take 5 days. It may take 10 days. So I want to go in with that expectation, but it's the context that's prompting me to have that expectation, not a candle, not a moving average, not some other gimmick or some nonsense that people sell you. It's simply the location. It's a support. There's a previous consolidation in this area, so it's likely to act as a support. Okay, that's the mid to high 27s or low 28s. If price works its way back there, by the way, if it works its way back there, that Ethereum trade will most likely get stopped out. I'm just letting you know, okay? But that's the place for the ideal swing trade. If you think, well, why not go short? Because shorts, while, you know, and Alex mentioned he's in a short is counter trend, which means you need to work with smaller expectations. I call the short way back here, okay? Way back here. And that thing got stopped out for 3,000 points. I called that short, all right? And it was based on the location and pulling back. It tried to pull back, but not far enough. It never went to 25K, right? So that's what I mean. It doesn't matter what we think, right? All that matters is what the market thinks. And there is some support here. Maybe we get a few inside bars over the next few days, and maybe it works its way back up over here in the next 2-week period. Does that make sense to you guys? So the point that I'm trying to bring across here is that we're looking at a number of scenarios. No one can say with any degree of certainty, no one can come out and say, whoa, it's definitely going here because my magical strategy with my oscillator says that's where it's going. So yeah, you can't say anything like that. Anything is possible. It can go there, but it's more likely to find support here. I'm only interested in probabilities, and I can gauge probabilities using price structure and context, right? And I shape my expectations based on that. If I want to go short, I know that I should be very small and expect less. I don't short Bitcoin, by the way, that hasn't changed, but I call shorts if people are interested in them. Okay, they haven't, that recent one has not worked out very well. The one before, I called this one worked out, but this one, no. Okay, the point is, if we're going to, the way we choose to work with the market, we have to work with the market information and let that shape our expectations. Not what we think, not what we read in the news, not what some fraud tells us, okay? You have to shape your expectations based on market-centric information. We can get that information from a chart. You don't need any other source of information. It's amazing. People come to me and they say, well, how about this? And how about that? And how can you not watch news? And how can you know what's going on if you don't watch the news? News is the worst possible thing you can consume for trade ideas because it plants the seeds of opinions and it gets your expectations out of line with the market. That's typically what happens, okay? So I don't pay any attention to that stuff. The price action and the price structure shapes my expectations. So in the case of a short, like I wouldn't short this now. I'm waiting for the long. I'm waiting for the robot to call the next Bitcoin long, and I'm looking for that, and I'm going to see if I can work with that. That's what I'm going for. Otherwise, this thing needs to test this area here, and I'm looking for the setup there to go long. That's it. The plan is very simple, and I'm looking for the next leg to 33K, okay? Because as long as the bullish trend is intact, supports should be respected, and resistance levels are more likely to be cleared. Those are expectations. Now, if the market no longer wants to do that, then the market's going to have to prove that. And you know how? It's going to have to start taking out supports. It's going to have to clear this area with conviction, and it's going to have to clear this area. Okay? So if I see in a month or whatever, if I see price over here, then I'll be like, we broke some supports. There is some support here. Maybe we get one more move higher, right, to something like this for a lower high, and then that'll be a short, right? If I'd be anticipating the lower high in that situation, unless proven otherwise. But do you see how my expectations would change if we blow through these supports? You see how that makes sense? Instead, people are reacting. They react to all that. I'm anticipating the next move. The market tells me it wants to change. I adjust. Does that make sense to you guys? Okay, so that's Bitcoin. Let me get to your questions now. I apologize. It's taking me a while to get to your questions, but I'm going to get to your questions now. All right. So let's get to them. Let me know if you have any questions about that Bitcoin analysis. All right. Cool. All right. So I'm just going back here. I might be interested in going long MMS. All right. Okay. Cool, Suzanne. Yeah. How do I? Okay. So I explained that, Chris. You can ask me. Text me, send me an inbox on here, or the best place to find me is on the community. All right, so let me get to your questions here. I'm going to go back to YouTube here. Let's see what I got. I know some people were asking stuff earlier. Let's see what I got. Okay, dollar index. Oh, so let's take a look at the bonds real quick, right? Haven't been looking at those. You should be. Bond market, 10-year note. Look at this, right? 10-year note, nothing bullish about that. This is important because this is basically how the market is pricing in the future of interest rates. We got stuck at this resistance here. We're now pulling back. Now, here's the thing. The market acts strange, right? In all of this price action here, that's why you can't judge this on a one-to-one basis. You cannot. Understand this. The bonds, right, the 10-year note, have this range. And the bonds have been inside this range all the way since November. So unless the bonds do something significant, meaning the bonds take out the low of the range, until they do that, the market, I think, is kind of immune to all the price action inside the range because the market has seen it before. The market has seen interest rates this high, okay, at these, because remember, rates are inverse to bond prices. So the market has seen interest rates here. So the market doesn't care if we pull back a bit. So you may see this, market's going to sell off because, interest rates are rising. Interest rates are going back up. But the thing is, the market has seen these prices. So I think the market is less sensitive, right, until we do something significant like take out the lows. Does that make sense? So make sure you keep that in mind when you're looking at the bond market. If the bond market takes out the highs instead, if it takes out those highs, that's going to be a bullish sign, okay, because rates will be going lower in that scenario. So keep that in mind with the bond market. Now, the dollar index, of course, is going to be affected by this as well. Look at the dollar index. So, rising rates boost the dollar. Look at the dollar, double bottom on the dollar. All right, so keep this in mind. Now, double bottom doesn't guarantee that we're going to rally up to here, but the signs that you will see if that rally is putting itself together is break of resistance, right? That would be 102.5 on the dollar. We start breaking resistance levels, then most likely this structure is no longer in play, right? That bearish pullback, and we may be seeing another bullish leg in the dollar. If we see that, that's bearish for a lot of things. Gold, okay? Indices, Bitcoin, keep that in mind. And the bond market will also play, the bond market should also be aligned with that. All right, so those are those two real quick. You should always look at those. All right, let me see what else we got here. So I'm just going back. I want to see people's symbols. Okay, let me jump over to TradingView here. Okay, hold on, you guys. I request an Elliott wave counting on the weekly chart of Bitcoin, starting all-time high. All right, you want me to do a wave count real quick? All right, let's see. Well, hold on. But that let me go back to see what others. I know some people had some symbols earlier. Let me just go back here real quick. Kahoot. All right, let me see. I'll take a look at Kahoot. Well, what's his name? Milad asked me something. A Tesla. Sorry, Milad. Let's take a look. Tesla. He asked me that so long ago. Tesla. All right, so Tesla. So here's the thing. Understand something about Tesla. It's a market stock, number one. Okay, which means it's going to be very sensitive to the S&P and what the stock market does. That's the first thing. So whenever you check a stock like that, you should probably check the S&P as well. Number two, Tesla has, we had this rally over here, like most market stocks. Since then, it's been in a consolidation. Okay, that's a higher low consolidation. Clearly, it's in a range. If the stock market can rally, right, you're most likely looking at a bullish breakout. Okay, I mean, just based on this pattern, it's a higher low. So if this support can't get taken out over here, right? If that can't get taken out, then and you get a break of 206, then you're probably looking at a move to here, which is what? 269, 270. That's the next resistance, basically, right? Look, you even have a gap over there. Look at this, right? Typically, gaps act as support or resistance levels, typically. Right, so here, like let me draw that a little clearer here, right? You have this gap right there, right? So you have a level up there that it may work its way toward. You also have some other levels here like this one, but those are levels you're looking at as potential profit targets or, take profit areas if you're getting long this thing. Just keep in mind though, while the general structure looks bullish, keep in mind, you have to consider some other factors like the bond market, because again, if the bond market continues the way it's going, Tesla is very sensitive to interest rates because they borrow a lot of money, right? Like all the other car manufacturers, and that will put bearish pressure on this thing along with the S&P. So this right now, these prices, even though this thing looks generally strong, these are bad prices to be getting long, in my opinion. I think you should be looking for support levels. If anything, look for closer to support because there's a decent chance that this thing will test supports. Right, and your support right now is 174. This thing takes out 174, you're looking at a leg lower, okay? And who knows? I mean, the next support after that is 123. I'm not saying that this is a forecast that'll go that low. I'm just saying that's your next relevant support level. And the bond market can make that happen if the bonds, if rates continue to rise and the dollar continues to rise, which the Federal Reserve is in favor of. Okay, so please keep that in mind when you're dealing with the stock. You do have to consider some of those things if you are thinking long term, right, with something like Tesla. All right, so good question. Let me just go back here. Let me go back. All right, you guys get great answers. Okay, Kahat, K-A-H, Kahat. Okay, this is a stock, Kahoot. All right, is this Australian? Is this from the Australian Stock Exchange? I guess no, that would be the, I don't know, what exchange is this thing on? Let me see. Kahoot? Obviously that's not, oh, this must be London, Euronext. Okay, whatever it is, it's not US. Kahat, this must be it. Okay, oh, I see, I got you, Oslo. Okay, it's not Australian, never mind. I was gonna do my Australian accent, never mind. I don't have any mites here today. All right, so here's the thing with the stock. Let's go to a weekly chart. Okay, when you see a situation like this, go to the weekly chart and let's see where this thing has been and where we are now. Man, Kahat has been not, certainly not hot. This thing was at 120 at one point, and we're fooling around now at $23. So here's the thing. Generally, this thing is weak. Generally, this thing has not done anything bullish in recent time, number one. Number two, you have resistance at 28, okay? So if you're thinking long, you're thinking in Captain Obvious terms, because sure, this looks long. Oh, it's getting strong again. But you're going right into a resistance in something that has a horrible structure here in terms of for longs. So if you're long, you should be looking to reduce risk above $25 or 25 euros, whatever this thing is priced in. And if you're looking for longs, right? If you're looking to get into a long, you should look for supports, if anything. But keep in mind, a lower low has a greater chance of transpiring than this thing getting bullish. Does that make sense? And also now you're dealing with, you're on Euronext here. So you're dealing with like, most likely the euro, right? The value of the euro. I don't know if this thing's priced in euros. I don't know. No, it's in Norwegian. It's in It's okay. It's in Norwegian kronas. All right. So you're dealing with that aspect of it as well. You have to keep that in mind. The currency can have an effect on this. Okay. So keep that in mind. Look for support around those lows. Don't get sucked into this nonsense. You're fooling around near resistances. Now, if this was a super strong stock, okay, I would say, okay, you know what? Breakout possible. I'm not a big breakout guy. I'm not a big fan of breakouts, but I would say breakout possible, not in this situation. Your general structure is horrendous here, or I should say bearish, okay? So that's why you need to look at those bigger pictures, because when you look at a smaller picture and you see this, you're like, oh, there's a bullish trend. It's not really a bullish trend. It's a short-term bullish trend within a broader bearish trend, and you're at a resistance level. All right, so quick perspective on that. I hope that helps. Okay, so I think I answered those questions. Okay, so Noah, let's see if I can do the Elliott wave real quick for you here. Just going back here. If I missed your question, I apologize. I'm amazed people don't follow you. Oh, hey, Levant, how are you? Well, Alex, I'll tell you why they don't follow me. Because I tell the truth and I don't give people hope. Okay, people want to be lied to. We've gone over this before, right? Everyone wants to be lied to, and usually beginners, when they find me, they don't want to hear what I have to say, because I'm not promising big numbers. I'm not promising you can make $1 billion tomorrow, and I'm not giving you some kind of gimmicks. Oh, you're gonna make 500% a month, right? Or I'm gonna show you how to turn $500 into 50,000. If I came up with crap like that, then I'm sure people would listen to me. Okay, but I'm honest, I'm transparent, and I'm letting people know the reality. That's why people don't follow me, on top of my bad marketing skills. But my message is not one that people want to hear. Okay, it's usually after a couple of years of failing, then people find my stuff. Oh, this guy makes sense, right? Once you realize that most of this game is a lie. Okay, this is the most deceptive business in the world, and most of this game, people lie. I mean, through their teeth. I mean, there's so many things I come across. I'm like, oh, man, one fraud after another, after another, after another. It's like unbelievable, man. But the only way you're going to be able to protect yourself from that is really actually having a good academic foundation and having a good grasp on the fact that markets are random and that you typically can't beat an efficient market. If you knew that and you grasped that, then you would see through all these gimmicks, because the efficient markets hypothesis refutes all of these gimmicks. And if someone has a true advantage, a true statistical advantage, they're not going to share it. They're not going to give you the magical formula. My robot, by the way, it looks to capitalize on temporary advantages. All right. And if there are changes in the environment, I can adjust those. So it's not like some kind of fixed statistical inefficiency. They're temporary inefficiencies, which is not the same thing. Secondly, I'm not actually giving you the formula. You're just getting the notifications from the formula. Okay, so just to let you know, people don't give away something that actually takes advantage of specific inefficiencies. They would just use it for themselves, especially the guys that say you're going to make billions of dollars a day. All right, anyway, the stream today alone has more value for a retail trader than that. Thanks, Kai. I appreciate that. Yeah, I really want people to, at least if anything, the goal of my streams is to help you protect yourself. That's the goal. People like, I mean, look, I only got 12 people following me here, right? I'm watching me right now. I see complete frauds on YouTube, complete frauds with 1,000 people watching them. Why? Because they're showing some kind of magical strategy, right? Where you're going to make all kinds of money and blah. It's all nonsense. Anyone that uses words like "this is a game changer," "this is gonna blah," but you should run because they're a fraud. Okay, stuff like that, or they show you their P&L. I'm going to show you how to make this, or they show you a big house and a nice car. That's what sells products. Okay. Anyway, and most people are very happy to be lied to. They love the lie. All right, so let me do Elliott Wave real quick. All right, so let's go back to Bitcoin. Sorry, I go off on these rants, but come on, you guys started it, man. You guys get me into these rants, and I can't help it. All right, so Bitcoin. Now, Bitcoin. Let's go to the weekly chart. Now, you want to talk about a wave count, okay? General wave count. So here's the thing, right? Now, this goes back quite some time. We're going to say that this here is wave 1, right? That's the top of wave 1. Then we have the wave 2 consolidation. This type of move is typically wave 3, okay? Then we have the wave 4 pullback, which never touched the area of wave 1. So this can qualify here as a wave 4. But now this is where things can get tricky. Now, wave 4s can make a higher high. So, is this a wave 5? Is this a wave 5 or is it a wave 4? Well, the thing is, right, we're looking at a weekly chart here. If I can count 5 waves in here, I guess I guess 1, 2, 3, 4, 5. There are 5 waves in there. There are. If that's the case, then that's a 5th wave, right? And typically after 5 waves, we have retrace. So we have the retrace, right? So this is our broader wave 2, I guess we can say. Right, and we can see 3 specific legs, A, B, C. Okay. Now here's the thing. So if is wave 2 complete? I mean, corrective waves are typically 3 legs, but not always 3 legs. So here we are in this situation here. Is this a broader wave 3? It's hard to say, because these type of wave 2 situations, right? We're going to say this is all broader wave 2. These can be compound corrective waves. That's why Elliott wave is it's extremely subjective, right? So, I mean, we can argue that this is a wave 4. I've argued before that this is a wave 4, but it's very subjective, because we can say that if we determine that there are 3 legs in here, then we can call that wave 4 and not a wave 5. But I can actually count 5 legs. All right, if I count this here as 1 and 2. Sort of. I mean, this went slightly below, which it should not do, but barely, right? So if we count this as 1 and 2, 3, 4, 4 doesn't overlap 1. I mean, hardly, barely. It overlaps a tiny bit. So this is where subjectivity comes in, right? And then 5. So if that's the 5, if that fits the description of 5, then all this corrective stuff is wave 2, a broad wave 2, okay? And we could be in the early part of a wave 3, or it could just be a compound consolidation of wave 2. So it's hard to say. The market needs to offer clarity. This is not exactly clear. So it's possible that a broader wave 3 is developing, but it's hard to say if we're in a leg 1 of that, or if this is really just a wave 2 X leg. You can connect compound corrective moves with X, Y, and Z patterns, or X, Y, and Z structures. It could be one of those. So it's going to have to really prove itself a little bit more before we can really give it a more definitive label. Does that make sense? So it's hard to say. And like I tell people, if it's confusing, don't let it confuse you. Just don't go by the wave count. until clarity appears. I only, by the way, when I use Elliott wave, if I use it, I'm only looking for wave 4s or wave 5s. I don't get mixed up with anything else. Okay, that's really all you need to know are wave 4s and wave 5s, because they are they're the clearest waves and easiest to determine, or to at least get some expectation of what is likely to unfold next. Okay, so look, the wave counts are good for a general idea of roadmap, but do not get married to them. I must warn you, do not, because things change. This is why you're better off using support and resistance and general structure, right? Price structure. And if the wave count fits in, great. It can give you some extra layer of perspective. If the wave count is confusing, overlook it, because you'll get more value from the by the support and resistance levels and the structures. Simple is more. Less is more in this game. I can't say that enough times. Okay, teachers providing real value get unusually, yes. That's true, Kai. But that's human nature. People want to be lied to, like I said. Okay, so people don't want to hear reality. The biggest guys in this business are the greatest liars. Okay, the greatest liars. And I see some of this, I'm like, oh, I can't believe people are buying this. That's the nature of this business. It's not very encouraging or incentivizing for me, by the way. Our nation's bank chairman invited a high-ranked U.S. expert to do it between Bitcoin and what are the pros and cons to adopting them. To my surprise, Bitcoin. Well, you know what? I saw some stuff on that too. I have to say that the problem with those central bank currencies, which has been pointed out, which I agree with, is they can control how you should spend your money. That's a big problem. So if you're of a certain political affiliation and they want to give you a hard time, they could prevent you buying things that you normally would like to buy, right? They could say, no, you can't buy that because, we don't believe that's a good idea for you to buy. They can do that with that. That's a big problem for me. So anyway, people, Alex, unless you're promising people that they're going to make like, $1,000 a day, with a $500 account, unless you're promising something like that, no one's interested. No one wants to hear you. I mean, look, I got no one following me on this stream. Okay, only my regulars. Is they can inflate. Sure, you don't have to print anything. You just press a button, and now you have a bazillion electric coins, electric dollars, whatever. Right? It's amazing. That's amazing. Yeah, I'm not a big proponent of that. That's for sure. Especially with our soon the U.S. is going to be like the next Romania. That's where we're going. No offense to Romania, but that's where we're going. Anyway, yeah. So okay, you guys. If I okay, no problem. All right. If I missed your question, I apologize. Look, I stream every Monday. Do me a favor, press the like button, press the subscribe button if you haven't yet. It helps me out with these channels. I'm looking to put more content out as well. I just have a lot on my plate, but I'll get there, okay? If I missed your question, I apologize. Please reach out to me. Send me a message. Come check the links in the description. Come to the community. Send me a message there. I'll be happy to answer your questions, all right? So again, thank you so much, everyone, for your time with me here today. I really hope you got some value out of this stream. All right, so enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.